Good evening. This is the Elliott wave update for the S&P 500 for Sunday, December 5th, 2021. As the Globex session gets underway here for the US, the markets are actually trading in both directions pretty rapidly. So the one notice that I have for today is that the volatility, even in the Globex session right now, has maintained itself. So the volatility to both the upside and the downside has really remained fairly strong since the opening of the Globex an hour and a half ago. So let's get into what I think is going on. And then in the S&P, it really is starting to get a little cloudy, but I tried to just work some different counts to see what looked right and what fit for what's going on in not only in the S&P, but what's going on in the balance of the markets. So here's what I'm seeing. At one point last week, I believe it was on Thursday's update for Friday, that I had spoke about the possibility that the S&P, the count would change a little bit in that it would be, give me a shot here, and I'll be right with you, but once again, my computer just doesn't like to move as fast as I move that mouse. So let's see if I can't get this. Okay, so what I had been counting was that this is the all-time high thus far at 47.42. And then I was counting, initially I was counting the 5-wave sequence down on a minor degree level. And thus I had labeled it as -1, -2, and I put us in that minor third wave down, which actually, now that I see, it is still in that minor third wave down. But what was beginning to turn my opinion as to what exactly the structure is going to be of the decline was that it continued to decline nicely, rally more than it should, decline nicely, spike, decline nicely, and rally heavy. And for whatever the reason was, that does not really sit well in terms of determining the Elliott count. So what I mean is that Elliott does not take into consideration any of the news, any of the fundamentals within the market, et cetera, et cetera. It basically just plays and shows us what the human response, the human emotional responses are on what's in force at that time. And so that's what we're measuring out. So what I'm witnessing is, get me out, nope, we're still bullish. Get me out, nope, we are bullish. And they've done this now, down, up, down, up. Now, a lot of people say this is a natural ebb and flow of the market, but when you're putting it in a pattern, and particularly under Elliott, there are characteristics that usually are found within each one of these waves. So they all have characteristics, they all have personalities. And so when I start to see that the personalities or the characteristics, such as here, come in, that begins to give me confidence that we are in the initial stages of the decline, and it is a third wave. But then when they bounce it back, it takes back from where within that third wave it could be. So I initially had thought, well, we could have the possibility where it's an A, B, C, an X wave, an A, B, C, another X wave, and we're doing another A, B, C down. That may well be the case, but that's going to remain over in the alternate view for right now. Because, and the reason that I did that is because of these bounces. They were going much higher, and really starting with this one. We're getting not ultimately super close, but close enough for a wave 2, and then the decline, and then it really rallied back again. The second wave has that possibility, but in the strength of the decline, what it was telling me is that the real sellers, the real 3 of 3, the point of recognition, we're not there yet. We keep building to it, and then we pull back, we build to it, and then we pull back. So what could that mean on an Elliott basis? That's how I've labeled it right now. That from this point, 4,717, we're in a minor third wave down. Under Elliott guidelines, third waves are often, most often, the strongest and the longest wave out of a 1, 3, 5, or a 5-wave sequence. So I have waves 1, 3, and 5. Wave 3 is most often the longest and the strongest wave in the sequence. So, and it almost always is the wave that extends. So it breaks into a 5-wave, 5 waves on its own, which is what happens. But then again, inside of it, it subdivides and extends. And this is what I believe is happening. And let me just share with you the implications once I put it out there. We're in a minor third. Minor 3 will consist of 5 waves of minute degree. Here's minute 1, minute 2. Then we start to subdivide. So within this minute third wave, we're going to have 5 waves of sub-minute degree. Well, here's sub-minute 1, sub-minute 2. Then, I think I got that labeled. Let me just put it down. Yep, all the way down there. Then it appears to subdivide again. And why? Because of this, what I would call a monster wave 2. And again, if this is 3, if this is sub-minute 2, this would likely be then sub-minute 3. And then the wave 2 comes way above sub-minute 1. Can't be. That's why I went back and did the ABC. But then I thought, well, hang on. What if this third wave is going to be a monster third wave here in the S&P? Then it subdivides yet again. So inside the sub-minute third wave, I'm going to have 5 waves of, again, a sub level. And here's wave 1 and wave 2. And if I got it, it's doing it again. So what this really tells me is that there's a lot of sell energy being built up, but it hasn't really started to push yet. We saw some of it last week. We saw some more on Friday, right? Twice before they rallied it into the bell and then picked up the rally again today. Now, I've already seen this Dow go up 200 and then suddenly sell off 120 points. Boom, driving the NASDAQ well into the negative and driving the S&P negative. But as soon as that was done, they moved back in, the buyers moved, immediately moved back in, just pushed it up 100 points and brought this back up from negative to positive and brought this up from, I think it was down like 40 to, brought it up $30. So with all that activity, they're not willing to give up that the market moves higher. And again, that everything's going to work out. Everything's going to be fine. That the Fed, whatever is going on, don't forget, we've got Fed news that just is not sitting very well. We've got a lot of negativity heading towards Jerome Powell, who's going to stay on the job. We have inflation that they misguided. They did screw up on that one, folks, because they didn't see how serious the inflation was, or that it was not just going to be a folly and just release itself. It is hanging on and it's getting worse instead of better. So we've got a very serious deal going there. We've got a dollar that will not stop rallying. So the dollar continues to rally. And that shows you inflation. So we've got a lot of things which the Fed kind of putting out in a little blurb of Jerome Powell talking one day last week that the tapering might start to accelerate before the end of the year. Well, they got about 4 weeks, 3 weeks to really start doing that. So I would imagine maybe they're going to try to hold off so that we could try to have a Merry Christmas. Then we've got, well, seasonally, the market in December always goes up. We always have this Santa rally because we've got everybody coming in to do all the position squaring and, we have all the funds and they've got to show a good thing, blah, blah, blah. That may not happen. There might be a little, instead of an October surprise, it could be December surprise. It could be that what people now want is like, no, you don't need to tell me what you have me long in. I don't want those at all. And so they just come in and they just start redeeming. So all the new money we saw coming in, maybe that ends. And now we just start seeing redemptions. People want to get out. they're done. They're just going to get out because they no longer have the faith in the market. I don't know. That inflation has taken hold. We saw a meltdown in the cryptocurrencies on Friday afternoon and then on overnight into Saturday. A basic meltdown. So there's a lot going on. And how it all plays out, they're coming in and they're buying right now. I don't think that ends well. So I think that you've heard me say it before, that the market appears to be on the cusp of falling off the cliff. I want a major cliff, 1, 2, 1, 2, 1, 2, 1, 2. That's an awful lot of extensions. And that would mean that we just really drop, come up and drop, and come up and drop. Now, what kind of support do we have coming off here? Well, we can push this pretty open. Let me go out, so I don't have to do it quite so hard. Let's go out to the hourly chart and pull it open. See what we can get. We have Fibonacci support. And that's just basically on the intermediate degree level. Where can we find support on the intermediate degree level? And that would be for this particular wave coming down with all of subdivisions. My take would be that it likely should reach 4,000 before this minor third wave is over. And if the market really goes into what we would call a crash mode, we're going to be breaking 39. If the market decides that's it, this has all been held up since November. So really for the last 2 weeks, they're holding it up. They think that there's some reason that traders or whatever is saying, we're going to go up, we're going to end up higher on the year rather than lower. And that could be the surprise if it doesn't happen, and the weight throws it into a tailspin. So we do have a lot of levels coming off that likely are going to come into play. Now for tomorrow, this little second wave, that if indeed it is, again, a 1 and a 2, it's buffeting up against the hourly 50 right now. And that sits at 45.59. I don't believe we've been above it. Let me just take a quick peek on this. Yeah, we have 45.59 is the high. So we got up there and touched it, but we have not exceeded it. So it's gone up, touched it, and is back off. And again, that's also representing coming off support at 45.57. So it went up with that because we broke through that on Friday. So coming back up, it's going to be resistance. We had that resistance at 45.57, and then also the 50-day moving average at 45.59. So can the market go above that? Sure, it can, absolutely. What's it going to tell us? Well, we might be on our way back up to 4,600, which was Friday's early high, 46.06. They might want to go back up there and give that another shot. What does that do to the count? It could change it. I mean, if it goes up and equals it and then plows down, it's going to be the strangest start to a major downtrend that I've witnessed. But then again, I think that the whole market has been very, very strange and doing a lot of uncharted or uncharacteristic things that you would attach to a bull market or a bear market. So it continues to be, in my mind, a market in transition. So for tomorrow, we can see higher levels, of course. So, but these are the resistance levels that I just gave you. And then we have 45.75, 45.80, 85.90, etc. They're going to come in that way because that's what we have left. We have 83, we've got 90 right there. You know, there are different levels that we can choose and go on. There's the 75 level. So that's what I'm talking about. That's where we're just going to go to price points. That's where you're going to find your resistance. And the market will do the same thing. That's where they'll find it. And then again, we have, you know, Friday's highs. And then we have the 200 right there, 46.10. Now, if it breaks it, it breaks it. And then I will figure it out, because then it could be, like I said before, ABC, X, ABC, X, A, B. There are a lot of possibilities still left. More important would be to trade it. So try not to keep this negative view in mind when you're trying to trade, because we need to trade the price action on what's happening in front of us. And if they're going to be buying it, well, it's going to move. And as long as it moves and we were following our moving averages, again, right now they continue to point somewhat lower. It's only the 4, the 20s just starting to hook ever so slightly. You'll see the 20 ever so slightly. So it's the 4. Now, if the 4 gets up here and breaks the 20, that's going to be a little bit more bullish. But you can see already, it hasn't. It's already drifted down to 45.40, and that was probably a half hour ago. So they're moving it. The volatility remains. That's the other important thing. Volatility is remaining in place, both sides. Okay, so follow the moving averages. When they're all in alignment in either direction, so to be in alignment to go up, all of this has to be above the 200. So there's a lot of proving to do. There's a lot of buying that has to take place before the hourly chart turns bullish. Okay, so just real quickly, and I know this is now going on longer than I need it to be, but I wanted to just throw in our moving averages on the daily because those are important. We closed below the 50 on Friday. Major weakness. Weakness, maybe not, confirming it. So this buying right here is just getting up to the daily 4. You've got the daily 50 at 45.55. Oh, excuse me, 65. So, daily is giving us a lot of no, not going to believe it. And it does more suggest that the next one is going to be a severe decline. So pay attention and trade accordingly and trade smart. Don't get married to either side. Really don't. Play what's in front of you. It'll work out better. Next update, Monday, December 6th.